All right, everybody, what's up? It is Tuesday, August 31st. That's it. Summer's over. Nah, not yet officially, but it feels like it, the end of August. All right. So I got some pretty, I would say, concerning news, developments, whatever you want to call it. The flows, looking at the flows now over the last couple of days, have taken a decided move down. In other words, a slowdown in the flows, a contraction in the daily withdrawals, spending, whatever you want to call it, down now to the lowest level since mid-July. Now that's interesting because if you remember my last video, I talked about the month of June when we had the unemployment benefits cuts in 25, 26 states, and it was a very noticeable slowdown in the fiscal flows all the way into mid-July. What happened in mid-July? We had those child tax credit payments that went out. That stabilized the flows, and actually since then, if you've been following my videos, I've been telling you that the flows have actually had a slight upward acceleration, which was good. And so we saw an extension of the stock market rally and to new highs, and that's great. Now, what's happening, and I've been mentioning this now the last couple of days, is that we're coming into September, and the remainder of those unemployment benefits, I'm talking about the supplemental unemployment benefits, the COVID-related benefits, that's the $300 extra a week, they're ending for everybody. And some states, even though they're scheduled to end after Labor Day, I've been informed that some states, because of scheduling or calendar issues, they actually started to end them early. And I have seen over the last couple of days of data a pretty noticeable downturn, slowdown, contraction, whatever you want to call it, in the flows, now at the lowest level since that mid-July period. Remember, that mid-July period was the trough because we got the child tax credit payments, as I just mentioned. So this is concerning because, I mean, we haven't really even started with the total end of those unemployment benefits after Labor Day. This might just be a few states. And it's only a couple of days of data, so maybe it is a calendar issue in terms of the spending calendar, but I don't see the path for these flows to start to pick up again because, those cuts are coming. Those unemployment benefits cuts are going to start happening. They're going to be over like very soon. So if that happens, which it is going to happen, I don't know why I'm saying if, that is going to happen without any other fiscal new fiscal support coming in, I think we're going to see a continued slowdown in those flows to a new lower level. I don't think that's going to be good for the stock market or risk assets. All right. Now, I did mention yesterday that we may get some offset in the form of higher Social Security payments because there's going to be an upward adjustment due to the COLA, the cost of living adjustment, and I think it's going to be pretty significant. So it's not like these flows are just going to collapse. They're going to go down to a lower level, but as I always say, when you remove income from the economy, there are consequences. I mean, income gets spent, it flows to business profits and corporate profits. The stock market looks at that, and if you have some of that income taken away, that's going to result in maybe weaker profits or a slower growth rate in the profits. So the stock market will react to that in a negative fashion. I probably need a few more days of data. Certainly, I'd like to see after Labor Day what it looks like when those benefits are completely finished. But I anticipate right now, I'll just go on record right now, I think that this is somewhat of a bearish development, and it's going to manifest in a stock market correction. And don't forget, we still have the debt ceiling, all right? I think Yellen probably has, I think she gave a date like October 1st, maybe a little bit after October, maybe October 15th, when she could continue with extraordinary measures and still meet payments. If Congress doesn't do anything about the debt ceiling, then it's, you know, it's a default. I mean, even if it's in one or two or three items, spending items. Now they're not going to stop payments on the big items. It's not going to be Social Security. It's not going to be Medicare. It's not going to be Medicaid. It's certainly not going to be interest on treasury securities, because, oh my God, they're thinking, oh, you know, we're going to default on the Chinese. The Chinese are our bankers, right? Of course, that's not true, but this is the mentality. Oh, we can never do that. The Chinese, they're never going to lend to us, right? Those dollars that they have, that they print up in their factories, they're never going to lend to us. Oh my God. So that's going to get paid. But other things, and again, that's just the removal of income. Like, if you think about it in that way, in that phrase, remember, I taught you how to think about these things. Like, deficit is a net transfer to the non-government. Government deficit is a net transfer. That's good, all right? The more net transfer, the more income and savings to the non-government. That's powerful, that's strong. And the way to think about these cuts are, basically, it's a net transfer away from the non-government, us, away from the economy. It disappears, it goes away. Okay, so you reduce those flows. Again, you use the swimming pool analogy, right? You're draining out some of the water. You're draining out some of the water. Water level goes down. Not good. Not good. So yeah, that's what I'm seeing right now, and I got to keep an eye on it. But I mean, it's pretty noticeable over the past couple of days. It just really went down. Now I keep a database on this. I have, you know, I see the number. That's the beauty of this thing. I don't know if I mentioned that yesterday, but like, I see the numbers every single day. And it's not like I'm special and I have some, you know, inside connection and I'm in my secret laboratory and only I get this secret data and nobody else sees it. No, it's out there. It's in the daily treasury statement. You know, I keep a record of it. I keep a database of it every single day. I could track that. I'm not sitting around waiting for some, you know, data release that tells me what happened last month or last quarter. No, I see the thing every single day. And this, like I've said this a million times, I mean, this drives everything. And you'll see that I'll be right. Like, if these flows are actually slowing down and contracting, the market's going to go down. The economy is going to shrink. It's not rocket science. I mean, this is what drives this stuff. All right? By the way, I do sell a course called Understanding the Daily Treasury Statement. It's $99. It's a video course. It's on my website, pitbulleconomics.com. You could do this yourself on a spreadsheet. You could do it in a notebook. I mean, it's just a couple of operations of addition and subtraction. It's very, very easy. Somebody asked me, I think somebody put up a comment like, how do you figure out the flows? It's very easy. Very easy. It's like looking at your checkbook. I mean, what's the daily treasury statement anyway? It's like, that's the checkbook of the United States federal government. It's like your checkbook. You have withdrawals, you have deposits, you balance your checkbook every month, or at least you used to. I don't know if anyone does that anymore, but that's it. Anyway, so that's what I see. We'll keep an eye on it. I'm cautious right now. See what happens. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I made a podcast today. I'll put it up tomorrow. Bye.